Housing starts and building permits, much bigger declines than economists had expected. Our Diana Olick has more on what's been happening to housing in just the past few days. Hey, Diana.
Hey, Carl. Yeah, big miss on both starts and permits. Housing starts fell just over 14% month to month in May, down 3.5% year over year. The Street was looking for a 2% decline. That's the lowest level since more than the start of the pandemic 2 years ago. If you break out single family, which is what we're watching so closely right now, that was down 9% for the month. The builders are clearly worried about rising mortgage rates and a sudden drop in demand from home buyers. We saw that in the builder sentiment numbers. Building permits, which are an indicator of future construction, they fell 7% for the month, essentially flat year over year, but the lowest level since September of 2021. The biggest drop was in multifamily, but single family down 5.5% for the month. Again, all of this because affordability is just getting whacked by rising mortgage rates. The average on the 30-year fix started this year at just over 3%. It is now just over 6%. Builders in their last earnings reports over a month ago had said they were still seeing strong demand, and they said they had pricing power. But just yesterday, John Burns, a noted housing analyst who surveys the builders almost daily, told me on our CNBC Financial Advisor series that builders are starting to drop prices. That's obviously going to hit revenue going forward. We know there is a big supply of unfinished homes in the pipeline, which Fed Chair Powell noted yesterday. He also said home buyers need a bit of a reset. That is, supply and demand getting back to normal. He said the Fed is watching home prices, quote, quite carefully. Back to you guys.
So, Diana, that was my question, is what is happening with prices and why are they not coming down as these mortgage rates skyrocket? I spoke to the Home Depot CFO in that Financial Advisor Summit that we did yesterday, and he was saying as long as people feel like they've got good pricing on their homes, they're going to invest in it. And so that's why he's not seeing a slowdown in terms of the business of Home Depot. So I'm curious where that's going.
Well, when you talk about home prices, there's a difference between home prices declining and home price gains shrinking. So we're seeing a 20% increase in home prices right now year over year. Normally, historically, that should be 4 to 6% in a balanced market. So do we start to see prices level off, go down to maybe a 2% appreciation rate year over year, which would be healthy for the housing market? That's what most are predicting, maybe flat for a year or two. And that would help demand and supply in the market. Now, do we see some local markets that had overheated, perhaps in Florida, Phoenix, Austin, Texas, those really overheated markets? Do we see prices actually fall year over year? That would take a lot, but we could. But as you said, homeowners are sitting on trillions of dollars of equity right now because they've just seen their home equity rise so quickly over the last 3 years. So they're still pretty confident that they have wealth in their houses. But, you know, it's the home buyers out there and potential sellers who are really watching those prices.
Diana, I don't think we've had a chance to talk with you about Redfin's comments earlier in the week, not just about traffic and home buyer budgets, but the idea that this is not a dynamic that's going to last for months or quarters, but in their view, years.
Yeah, that was Glenn Kelman, who posted a very long blog when they announced that they were laying off employees. He said this will not last just months. He said it will be years. And, you know, I've known Glenn a long time. He tends to be dramatic, but I spoke to him on the phone after this, and he was not being overly dramatic. He said, look, we see it in the numbers. We see that the demand is falling. And, you know, you talk to any real estate agent out there right now, we tend to go to open houses over the weekends. I was looking for one to go to, and a lot of the real estate agents said, yeah, we canceled ours because we don't expect anyone to show up. So there's a lot of concern in the market. I don't think Glenn Kelman was overblowing it right now, but he did say we do expect to see that demand come back, you know, at the end of the summer, into the fall, just as things settle down and as the volatility in rates settle down as well.
He's probably looking at his stock price as well, which is down.
Yeah.
Yeah.
More than
and he mentioned that in the
year.
blog. He mentioned the stock price as well.
And the layoffs. Painful picture over at Redfin. Diana, thanks. By the way, it is notable today, even with the equity price action and yields, 2-year yield is lower. So we're going to keep our eye on that. What does that tell us?